Poland has crossed a critical threshold in its approach to digital assets, but the path forward is anything but settled. The Sejm, Poland's lower house of parliament, has approved a sweeping government-backed bill to regulate cryptocurrency activity, marking the third attempt to pass such legislation and igniting a fierce debate over the balance between consumer protection and state overreach. The approved legislation, formally known as the Crypto Asset Market Act, is designed to implement the European Union's Markets in Crypto Assets Framework, MiCA, into national law. On Friday, 241 deputies voted in favor, 200 against, according to Poland's PAP news agency. Spearheaded by Prime Minister Donald Tusk's Liberal coalition, the bill now moves forward as the lead proposal after parliamentary committees dismissed competing drafts, including a more restrictive version from the presidency and a minimalist alternative from Sławomir Menczen's Konfederacja faction. The only concession to the president's position: a requirement for financial authorities to submit annual reports on the state of Poland's crypto market. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. But the real story isn't just the vote, it's the crisis that forced it. The collapse of Zondacrypto, a Polish-rooted exchange operating under an Estonian license, sent shockwaves through the financial and political establishment. In April, the platform halted withdrawals amid severe liquidity issues, locking out users and freezing an estimated 350 million Polish zloty, over $95 million in assets. Preliminary investigations suggest at least 30,000 Polish citizens were affected, triggering probes into fraud and money laundering. The fallout didn't stop at financial losses. Allegations have surfaced that the exchange was used to fund opposition groups and political events, with claims of Russian influence intensifying the scrutiny. The new Poland crypto regulation grants significant powers to the country's Financial Supervision Authority, known as KNF. The regulator will now have authority to issue early warnings on suspicious crypto projects, freeze both fiat and crypto accounts, and suspend transactions for up to 96 hours, with the option to extend that freeze for 6 months. These KNF crypto oversight powers go beyond what's required under MiCA, raising concerns from legal experts and opposition lawmakers. President Nawrocki previously vetoed earlier versions of the bill, citing excessive state control, particularly the ability to block accounts without immediate judicial review. The fact that this version passed despite those objections signals a major shift in momentum. The stakes are high. Poland has until July 1, 2026 to fully implement MiCA across its financial ecosystem. This deadline is not optional, it's a mandate from Brussels. Failure to comply risks fines, restricted access to EU financial infrastructure, and reputational damage for domestic crypto firms. The Sejm crypto vote positions Poland to meet that Poland MiCA deadline, but it doesn't guarantee final approval. The president could still reject the amended bill, reigniting a constitutional standoff. Meanwhile, the political landscape is shifting unpredictably. The Law and Justice Party, or PiS, which helped elect President Nawrocki, has made a stunning reversal. After previously opposing Tusk's restrictive approach, PiS now backs a full crypto ban, citing the Zondacrypto disaster as proof that the entire sector is too dangerous to regulate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. So what's next? The bill must now survive presidential review. If signed, the KNF will begin licensing crypto firms and enforcing new disclosure rules. But enforcement is only as strong as its legitimacy. Public trust, already damaged by the Zondacrypto collapse and allegations of foreign interference, will be the true test. The final signal to watch is clear. Will President Nawrocki accept the compromise, or will he issue another veto? That decision will determine whether this Poland crypto regulation becomes law, or whether the country descends into another round of political deadlock. The outcome won't just affect Polish investors. It could set a precedent for how democracies manage crypto in an age of financial and geopolitical risk.